The reason for me to do angel investments, besides having that upside, is to be connected with founders who are doing exciting things, and that breathes energy into what you do also in your regular life, right? Just being around, listening to ideas, is just a great way to just find that extra energy in your life.
Today we had Ranjan Kant on the 1947 Operators podcast. Ranjan Kant is the co-founder of Arthmate. Arthmate is enabling entrepreneurs of emerging Bharat. He also co-founded Ofbusiness. Currently, Ofbusiness is valued at $5 billion. And Ranjan is also a prolific angel investor. In this pod, we covered what drove Ranjan into angel investing, his investing process, learnings from angel investing, his advice on how to start angel investing, and much more. I ended up learning a lot from this conversation, and I'm hoping that you would too. All right, I am super excited to have Ranjan Kant, the founder of Arthmate, on 1947 Operators podcast. Ranjan, welcome to the show.
Thank you, Shiva. This is my first time doing a podcast, and I can't say how excited I am to do this. This is
Man.
something new for a 41-year-old. Thank you for letting me,
Well,
for considering me and giving me this opportunity.
first of all, you don't look 41 at all. You look much younger, and I'm super excited as well. So we'll dive right into it, Ranjan. What drove you into angel investing, and do you remember your first angel investment?
Yeah. So what drove me to angel investing is pretty simple. All my life, I have been sort of a risk taker. I'm a nerd, and technology has always been super exciting for me. So I used to code in way back in Swift, C++. Those were the days, and then I moved to Java, Python, etc. So I have kept with the trends, and when this whole angel investing started, it was kind of so I after spending 7 years at BCG, I figured out I'm not a sales guy. So I moved and joined Snapdeal, which had just raised funding from SoftBank. Rohit Bansal is a good friend, and that's how I joined him. And that's where I figured out these guys. So Rohit and Kunal used to invest a lot, and being on the sidelines, it seemed like a good opportunity initially. Obviously, nobody knew me, and it was tough to get, because the deal circuit was also not great. So what happened was, one of my friends from IIM Ahmedabad, they had started a firm of their own called Glaucus Logistics, which has been sold to Delivery now. So that was my first angel investment.
Got it. And Ranjan, fast forward to today, you've done around 20, 25 investments, and you just mentioned that back in the day, it was hard to figure out what deals to invest in, even sourcing deals. But today, how do you source deals? How do you pick deals? How do you win deals? And how do you help founders?
Sure. So I think the reason for me to do angel investments, besides having that upside, is to be connected with founders who are doing exciting things, and that breathes energy into what you do also in your regular life, right? Just being around, listening to ideas, is just a great way to just find that extra energy in your life. So the way the deal scene has evolved, I think, with the advent of platforms like AngelList, Let's Venture, IP Invest, the deals are a lot more easier to discover. What has also helped is, obviously, the Indian startup ecosystem has burgeoned, and hence there are a lot many more people starting up and coming around for deals. But these platforms have really taken it to the next level. Now anybody who is even out of college, right, and starting their first job can start with these platforms and start investing. For me, the primary source of deals is still through my friends network. The way I pick deals is, I look for three key things, right? So when you're doing early investing, you really can't look for financials or solid numbers. If that was there, you wouldn't be investing in the first place. They would be asking somebody else for the money. So I think the first thing I look for is product pedigree experience. Either the product is differentiated. For example, one of the products I invested early on is Sleepy Cat, which makes all these mattresses. And at that point of time, I don't know, Shiva, if you remember, the mattresses which used to come would only lie flat. So they disrupted the supply chain by making their mattresses foldable in a kind of a cylinder, so that many more mattresses could be stacked together rather than them lying flat. And that, I think, changed the whole profit and logistics game for them. And that was something which was very close to what I call innovation. So that's product for me. Or the founder has enough pedigree or experience for me to figure out, oh, this person will get this right. So that's my first criteria. Second is, I typically look at the market size, and I see if the startup I am going to invest in can be a speck on the horizon of that market space. I am typically not a fan of somebody saying I want to be 10% of this market. Happens rarely. I am not a fan, right? People, obviously, the dreamers have to be dreamers.
Yeah.
And the third big thing I look for is the what I call jugaru, ability of the founder. See, 90% of startups pivot. Even Arthmate, we started as a personal finance thing. Now we are finally figured out embedded fintech is the way to go for us. To manage that transition, very interestingly, I was reading, psychologists have now figured out this fourth quotient called adversity quotient, in addition to EQ, SQ, IQ. I think that's a super interesting thing to look at when you deal with young founders, how they will manage a situation to pivot, or let's say something like COVID comes your way again. What do you do then, right? And those are the three things I see: product pedigree, experience, market size, and the ability of the startup to become a spec on the market, and the jugaru ability of the founder. And that's how I invest.
Got it. And Ranjan, what kind of check sizes do you write, and what sectors are you sector agnostic, or and what stages do you come in?
So personally, I write anywhere from 10 lakhs to 30 lakhs, because again, a simple principle: I don't want to be a burden on the founder, and that means the money doesn't have to be a burden on me, right? So if I write a check of that size, I don't really worry about whether the founder has sent me an update, what is happening next day, stuff. Those are good hygiene factors, and people who do it obviously do it with the right intention. But I am not that person, right? So I want myself to be stress free, and my check size also obviously determines the valuation and the stage the founder is at. But we do have a family office which I share with my co-founder. From there, we have written larger checks also, closer to $1 million. Which would be a Series A, or for a smaller startup, maybe a Series B. I am able to actually put money in angel, Series A, and Series B, for depending on the size of the company.
Got it, guy. We'll talk about some of your portfolio companies now. Ranjan, maybe you can walk us through some of your winners. How did those investments came about? And also would love to hear from you. Were there any misses? Meaning you had a chance to invest in a company, you didn't, and the company ended up doing just amazing. And what did you
Yeah.
end up learning from it?
So there have been quite a few of the misses, so as to say. On the hit side, I think I have been lucky. I have had one startup where I lost 20 lakhs of my entire capital, which is okay. I wouldn't obviously name the company, but I have had quite a few winners. For example, Sleepy Cat gave me good returns. Then there was Blockus, which I spoke about, which got acquired. They gave me a pretty decent return. Then I exited 2 3 other companies which I can't share names of, for confidentiality, which also gave me a good return. So my maximum return rate has been around 50x on my investment, and the minimum has been where I have got a return around 2.3x. That's the range, and frankly, that has been a lot of luck. On the misses side, I think one of the big misses was obviously Bharat Pay. Ashneer was my IMA batchmate, and a
Yeah.
lot of my batchmates invested in it. Unfortunately, at that point of time, I was doing a career transition, and I just couldn't. That's I think one of the biggest problems being a operator or investor is you get influenced with so many things in life, right? And so, for example, right now, every LinkedIn email I get for an investment, my standard reply is sorry, I'm scaling my own startup and I don't have bandwidth to engage. And I'm sure I will repeat five of them tomorrow. It will happen, but you need to be able to give attention, right? You sign up for
Yeah.
something. I expect the founder to ask me to introduce them to people, to ask help on data sciences or tech, which are my fields. And if I'm not able to pay attention to that, then it's not worth just putting in money for the sake of it. There are thousand things you can do with money and make returns. So that was one big miss. The other one I thought was this is just in terms of valuation was Park Plus, where I again a friend started it. Again, I was in a situation where I couldn't think about it. Again, my friends made money, so all that happened. So yeah, these two would really stay with me.
God, I guess the lesson is to always be backing your friends.
Yeah, yeah. That goes without saying. I think the bigger lesson, Shiva, is if you can be disciplined and every day and I mean every day, right? Put in 1 hour towards this. If you're serious about it, it will lead to far better outcomes. For example, I am very fragmented right now. If I invest money and I have done 2 3 investments so there is a person who runs our family office. That person looks special, but the investments I have done three in the last year, and all of them have been highly recommended by a friend. I haven't looked at the deal, I haven't done the due D. I've just gone ahead and said, somebody is going in, so I'm going in with them. So bad way to do it, but yeah, it is what it is.
Got it. In fact, I had Abhishek Goyal of Traction on the podcast, and his best deals were basically highly recommended by his friends.
Yeah,
And so, for example, uh, Flipkart,
correct.
Delivery, Rupeek, and bunch others. And Ranjan, you know, over the years, have you changed your mind on something while investing?
You mean I invested and then changed my view on the company? Is that what you meant?
Or maybe I would say, something that you know now or you learned later
Ah,
on, you
yeah.
wish you knew it earlier.
Yeah, yeah. So one of the things earlier, right? I wouldn't, and I think it's also about being 41, and you figured this out over age, right? Earlier, I used to get very excited with pedigree, right? I used to think pedigree means because I came from pedigree. I went to IT Kharagpur, I am Ahmedabad, and I was with those people, right? And it felt like these guys have really put in a lot to get here, and these guys will obviously have in it to go from here to the next level, right? But over time, I have felt more than pedigree. It's also about, sorry, I mentioned it before, about the adversity quotient that the person has. A person might have pedigree, but they might not have it in them to fight it out, right? Or when faced with any sort of adversity, being able to deal with in a way which is so. There are many people who deal with adversity, which leads to poor governance outcomes. I'm sure Shiva, you know enough of them. I don't need to recount. And that's one big learning that when faced with adversity, what is this guy's go-to reaction, right? Is it flight and fight is fine, but is it also about fight? How will it be fighting while ensuring that the at least the laws are complied to, or will it be something like I have to break it whichever way breaking happens. That I think. What has also happened, Shiva, is with Arthmate, we have our own NBFC. So we have to be super compliant. I truly believe if you stay compliant for 3 years, you would anyway win the market, right? That's the way financial services operate. That's my belief. Many people would say compliance is also detrimental and stuff, but I think you are dealing with a lot of common investors, masses, so as to say, right? And these laws are made for a reason, and you need to be respectful of them for sure. So I think that is one angle I have added to my investing. I look for what will this guy do if in a hypothetical situation he's fraught with with issues to his
Yeah.
business his or her business model or the firm itself.
Yeah, yeah. I forgot the name. I think it could be Samuel
Uh,
of Haystack. So he said, there are two types of founders. One is, let's say, CPO or head of engineering at Zomato or Stripe or big companies, they're starting up versus very very high talent, but they haven't shown much. He said, I'll probably pick those people over who already have massive pedigrees because they've always worked in comfort zone,
Yes,
right?
yes.
They've always had good paycheck and all that. So now you have to figure it out versus, being an entrepreneur slash talent. Like, can you figure out, do they have both of those things? But very important point there, Ranjan.
And Shiva, one more thing. Sorry, I'm just adding to that. I have started taking a bit more interest. So I'm a nerd and I'm an introverted nerd. So if you meet me, even socially, you would ask me all about my wife, what we have been doing on vacation. It will be an
Yeah.
afterthought to me. Oh, I have to also ask, right? But I have realized personal journeys also shape people a lot. While people keep saying they can draw a boundary between professional and personal, for a founder, frankly, there is no boundary. What goes on at your home seeps into your business, and what happens at your business seeps into your home. I've seen it enough with myself and with people now. So I pay a lot of attention also to what is the kind of personal journey the person has undertaken, because that also shows you steel. That also shows you the ability to bounce back and make inferences from there.
Got it, got it. No, very, very interesting point there, Ranjan. And Ranjan, imagine, I'm an operator, got some liquidity. I want to start backing, early stage founders. If you were to give a framework, of course you started when the infrastructure was not there, the ecosystem was still maturing, but now there are plenty of these things around there. What approach would you recommend one can take to be able to source deals and invest in companies?
So my first port of call is, please read Jason Calacanis. He has written a great book, at least on the process one needs to follow. I think if you are disciplined enough to follow that, 90 times out of 100 you will hit it out of the park, right? So that goes without saying. The book is called something from 100,000 to million, right? Something like that. So
Yeah.
so so, so that he actually discovered Uber. I'm sure you know Shiva. So that one book is a must read before, and it's available as an audible, so you can just listen to it. It's very very good. But I think if you have to ask me, the first thing is, even before getting liquidity, Shiva, if somebody is serious about it, right, they need to think of it just like you think of stocks or mutual funds, right? You have to build a habit out of this, and not have it like a, yeah, if I have liquidity I will do it, right? And the beauty now is, with the advent of, as I was mentioning, AngelList, Let's Venture, IP Invest, right? IPV. So there are a lot of these platforms which let you participate with smaller ticket sizes. And I think once you start participating, two things happen. First is you develop a network. People see you just like we got connected. People get connected, and it has been a stunning experience. How many people I have got to know simply because I have invested in a company and they were on the CC email chain when the share certificates went out, right? So stuff like that is very very cool to happen. So that's the first piece of advice. Make it a habit, and now it doesn't take a lot to invest on AngelList. I'm sure, Shiva, you are one of the founders. You should hold a podcast on that, how to get onto AngelList. But that's definitely where one should start with. The second is people, and that's very contrary to my nature. So I'm giving it as a suggestion, but I don't do it. I'm being very. I would love if I could do it. Be completely shameless and reach out to anybody you thought is a cool guy ever in your life, right? Throughout your college, whoever you think would have broken it, or would be breaking it, just reach out to them shamelessly, and it will follow the typical Pareto. You reach 100, 50 will respond, 10 will have coffee with you, and that's when you will luck out onto one such network which will get you deals which nobody else will get to, right? Which won't come on an AngelList or a Let's Venture. They will be exclusive, privately funded a deal, and you get in early. For example, Dronacharya happened to me like that, right? I was part of one such network which was doing pre-IPO on Dronacharya, and I was able to get onto it. And that's how Dronacharya happened to me. It was a very, very private deal being done in outside India on a pre-IPO basis. And because I was in that network, I got access to it. Else, I don't think I would have ever gotten access to it. So that's the second advice. And third is what Jason, and this came completely new to me is what he talks about doubling down, right? It's harder because your typical thought is to carpet bomb, to put in as much money in as many places and get lucky. But I think real money only gets made once you double down, right? And double down can be minor also, but doubling down is key. So I have doubled down in I think 7 out of my 27 firms, out of which 3 have given me very, very good results, which I would have missed if I wouldn't have doubled down. So I think those will be the 3 pieces of advice. But make it a habit to start with, and
Got
that
it.
goes by spending 1 hour a day.
Got it. Got it. Make it a habit. Network, uh, and then yeah, read Jason Callence's book. Make sure, and
Shiva, sorry to ask, are there any other books you would recommend, given you have been in that space? Would like love to learn if there is something.
so I think for me the best resource has been 20 VC.
20 weeks.
Learn a lot, and even Jason, he runs a podcast around angel
Correct.
investing. So I was listening to his podcast, and then of course from my own podcast I get to learn from you guys. And so Ranjan, what was the founding story of Arthmate? Would love to hear from you.
So what happened, Shiva, was me and my co-founder, right? My journey has been, I went to BCG, then I went to Snapdeal, got to Jabong, got acquired by Flipkart, then became a co-founder at Ofbusiness, exited Ofbusiness because of some LP coming in and cashing out. Then went and that's when I met my co-founder. My co-founder used to run a policy consulting firm in US. He sold the firm and came back to India because of his parents' health. That's where we met after I had exited off business and he had come back to India. And we started delving into startup ideas, investing here and there. What had happened meanwhile, Shiva, is BCG had developed this domain expertise track, which is true for all management consulting firms now, where you don't need to essentially bring in business, but you are the expert who delivers a certain domain expertise. For example, my domain expertise was data science, so I helped BCG India build a 230% team on data sciences in India. I was the first data science hire in India for BCG. Meanwhile, Vihan, my co-founder, kept exploring, and Ashneer and Sohail used to be well known to him because they used to live in his condo. Ashneer was also my IMA batchmate, and they had a problem in the sense that Bharat Pay had 3 million merchants, but they were not able to give credit to them because they did not have a credit company on their own, and they were not willing to invest in a credit infrastructure back then. So we took up that mandate. My co-founder essentially took up that mandate and said, "We will do this for you." Once we started on that journey, we figured out there is a massive scope for embedded fintech in India. There was no such company per se which would embed with you and help you lend to your customers without trying to be an origination play or without trying to be a branded play, right? And we kind of built that was the starting of. So it was a not blue lightning, it was a lot of opportunity, but I think what we did well is once the opportunity presented. So see, I think of a startup journey in 4 boxes, right? You have to first see the train coming in. The train
Mhm.
has to be seen. Oh, this is the train I want to get onto. Second
Mhm.
is you need to get access.
Yeah.
Third is after access, you should step into the train because there's a lot of slip between the cup and the lip. Once you have gotten there, you have to ride it to the end. There
Yeah.
are many examples, right? People who joined Policy Bazaar in 2012, many of them left who stayed till the end. They are
Yeah.
making money now. I'm
Yeah.
sure you know of other examples.
Yeah.
So I think what we did well was once we started this, we could just be a balance sheet lender, right? We could just say, oh, this is a good Bharat Pay is a huge business. We could just live with it. I think what we figured out was there is a huge tech play in it, and balance sheet is just a enabling entity, and that I think that thought flipped a lot in our mind. We became a complete credit cloud operator with our own loan origination system, loan management system, risk engine, and being able to give it to people in a plug and play fashion. That's how we have now grown to over 60 partners, 4 or 5 co-lenders, people who co-lend with me to these 50 customers of these 50 partners. We have developed a bunch of service layers, right? KYC, NASH, micro ERPs, which get us integrated into our partner ecosystems much, much more.
Guy, I love the analogy, Ranjan. View startup as a train, Make sure you have access. Once you have access, step in and then make sure you're riding it all the way.
Shiva,
And
just like many things about me, that is also not original. It's based on a German framework. So in Germany, what happens when kids are there, they believe that kids' minds are like trains, and there is a light in one bogie of the train, right? And if you're able to catch that light, you will become great. You go to any other bogie, for example, tennis for you, right? It was like the light you had,
yeah.
and any other bogey you step in, you would be okay, you would be good, but you don't become great. So
Yeah.
just taken from there.
Yeah, yeah, no, love it. And Ranjan, I mean, who was the outside first believer in Earthmate?
Oh, it has to be. So our first believer was obviously Bharat as a institution. They became our first customer, and they became our first investor also. So they were the first real believers in us, and that's from there the story continued.
Got it. And congrats on becoming profitable.
Yeah.
It's almost unheard of these days. But Ranjan, my co-pilot Alfonso is bugging me now. He wants to come in and lead the podcast from now on. So he's asking Ranjan, if money and attention are not needed anymore, what would you work on?
Money and attention are not needed anymore. What would I work on? Oh, though, so it would sound very, very weird. I would have been a historian if I would have been in any other country. It's
Yeah.
just since I was in India and a Bihari, I had to choose between being a doctor and engineer. I became an engineer because I hate blood. So that's how simple it is. If given my time, all kinds of history super excites me. So I read a lot about. I read every book possible on medieval age, early age. What stays with me is all these amazing things which people have built without enough resources, like how pyramids got built. I don't believe in the alien theory, just to be clear. So how they got built, and history has always, and even India, right? For example, many people don't know what was the name of Ashoka's father. You ask them, they would know Ashoka, but they wouldn't even know his father's name. And that guy birthed the greatest king in India. So I think those are very exciting nuggets which I have in my mind. I have a lot of junk and trivia in my mind, and I would just want to do more of it. That's what I would do if I wasn't doing this.
Love it, love it. And Ranjan, how much of your success would you attribute to luck and why?
Oh, so luck. I think being in the right place, Shiva, is super important in life. I think, but I also believe, and it might seem a bit elitist to say this, everybody gets at their level some kind of being in the right place opportunity at some point of time. As I said, the ability to ride on that right place and stick with it. And I have made mistakes, Shiva. I don't think you want to bore your audience with my mistakes. I have made many mistakes. But the
Yeah.
point is, if you just are in the right place and you're able to seize that opportunity and live with it, that's so. One of the other principles, Shiva, which I have gotten in my 41 years is loyalty to something or to you is one thing which really gets super normal returns. And there are many examples where these people, as you were saying, would be without pedigree, would have started somewhere, but see today they are doing super well for themselves. So I think just sticking around with something is super important, and that I used to do a lot less of, but now that has been one of my core philosophies. Whatever you do, sorry, I keep saying this. I'm 41. I can't afford any more chances. This is it, right? And experiment is done. So this is where I am.
Man, 41 is the new 31,
Yeah,
Ranjan.
I believe that, sir. I believe that.
No, I think it's very important, thinking long term and just staying at it, not hopping here and there. Because at the end of the day, the biggest returns would come from long term thinking and then just keeping at it.
Yeah.
And Ranjan, what's your relationship with money?
Oh, so it's curious. As I said, I'm a Bihari, so all Biharis typically are very value for money.
Mhm.
So I used to be really high value for money, right? Almost penny wise, pound foolish. I would never think spending a lakh rupees, because that was not comprehensible. But if I could spend 10 rupees, I would think, oh, where can I get this discount which can take the 10 rupees away? For me now, money has become money has just become a enabler. So I would rather see. So two ways to answer this. In personal life, I'm a man of minimal taste, so not too much going on there. So money lets me do whatever I want comfortably. So see, another thing, Shiva, is I have asked many people, and including many CEOs in my BCG career, why do they work, right? Why do they earn money? So people typically think about three things: money, time, power. That's the way they think about it. Either they want to gain power or they want to gain money, because they have the most whatever there is, and power and time, because they want to be kings of their time. But unfortunately, outcomes of all three are anticlimactic if you think of it, right? Lot of money, we have seen people. Time, you start thinking, why am I so lonely? No, nobody is filling my time, man. And power only makes you enemies, right? So there is a fourth index which I call happiness. So for me now, money is to the extent that it can get me happiness and nothing more. That's it. That's my relationship with money.
Love it. I love the framework again. You got all the good, solid frameworks, Ranjan. With this, thank you so much for coming on the pod and really sharing your investing journey, Ranjan. I had a lot of fun. Thank you so much.
Thank you, Shiva. Thank you for the opportunity, and I will follow your podcast. Now you will have me as an avid listener of your podcast. Thank you.
Thank you.